And where I'd like to start at the very top is the topic du jour, if you will, what everyone is talking about, of course, are the new AML requirements. What's new, what's exciting is that each platform is coming out with kind of like their new solution. Some are kind of taking a really strong stance on it. Others are kind of giving a little bit more of a, hey, here's a partner that does this really well and enabling it that way. Couple different approaches there. I won't go too deep into it, but I think it does dovetail a little bit on a couple of discussions we had before about the idea of like this all-in-one versus more specialized approaches. And I think this is just another example of that. I think the solutions that have been historically all-in-one are really taking it on, and the solutions that have been more noteworthy, focusing on maybe just the deal submission, interacting with lender side of things, they're more so saying, hey, here are great partners that can help you with AML. So a couple different approaches, and I think that's continuing to come out. Hopefully in the next couple of weeks, my plan would be to come out with a little bit more of a deep dive on each of the solutions for those platforms that are doing solutions. But that's not this episode. This episode instead, what I'd like to take a little bit of time talking about, which I thought was interesting, and I want to spend some time talking about, is this article I saw by Geoff Willis, of course, is part of Newton. There's a lot of stuff here, but the area I want to talk about here is this fact of uniformity being more commonplace. So that's his, bold prediction, basically saying, hey, do you know what? Broker owners now with these new regulations may ask their agents to use the same CRM. So kind of getting a little bit more consolidated across the board in terms of these tech platforms, and saying at the brokerage level, before you had the luxury of allowing anyone to kind of do everything, these types of regulations might mean that there's more of an incentive to get everyone on the same platform and really kind of own it a little bit more, right? Own that process that the mortgage agent is actually doing with their clients. And so, I think it brings up an interesting thing where first off, you have to kind of say, okay, what is the nature of a mortgage agent versus, let's say, an employee at the bank? And I think, of course, it is that independence to go out and talk to the customers the way they want, run the business the way that they want. That's, fundamentally a big difference. So, the very nature of a mortgage broker is being independent. But what we're seeing is that, these types of regulations that come in, and I think I've talked about it before on this podcast, is giving opportunities, I think, for two big players to eat up a little bit more of the mortgage space and maybe chip into that independence a little bit. And the two players are, of course, tech players. So we look at that article. So Velocity obviously is looking at this, and I understand why, is I think an opportunity to drive their hooks in a little bit deeper, become a little bit more of a platform that everybody uses. So I think that makes sense for them and their business. But it's also the broker owners to kind of come in, and I think what it leads to is consolidation in that space. The broker owners, some broker owners might not have the capabilities to come in and put together these systems that'll do it, and so you're going to kind of get more consolidation in that space, and consolidation, I think, leads to less choice and less independence there. And so I think it's an interesting trend. I respect both Velocity, any broker owner who's thinking that way. They got to do what's best for their business. But I think it begs the question of kind of what's the long-term play here, or role of the mortgage broker as more independence gets taken. Where does that lead us? I don't think it leads us to the point where everyone's going to be salaried and just part of a bank, that the channel is done. I think it's far from that. But I think a more likely outcome, a place where we could end up, is something a bit more similar to PNC home and auto insurance. And so to take a quick detour there, we used to actually sell a bit of software in that space. And really what the dynamic of that space was that there was, yes, still brokers, there was still the channel, but it was more dominated by big brokerages. Those brokerages would continue to acquire and acquire and acquire and eat up these smaller guys. And then as soon as they did, they would force what they call their BMS, their broker management system, for, ding, 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 compliance reasons. To be completely honest, I didn't know the nature of the compensation structure, but I think it was a lot more salary plus commission, right? And that, okay, these agents, quote unquote, they were still part of that brand. They actually got a little bit of a salary for it, but there was still a big component that was commission. But, there was that dynamic there. So, I think that's just something that could be down the line. And, when I look at the industry, there's a lot of, pros and cons with that sort of thing, but I think it does eat a little bit into that independence, and it ultimately gives less choice to the end consumer. So I think it's something we got to keep our eye out for and decide the future that we want. But I think, yeah, regulation is, the thing that leads to that, right? So we'll see. We'll see how it goes over the next couple of years. But again, from a tech perspective, I think it's just another opportunity. Get your users, I guess, a bit more dependent on using your system. And we're seeing that in articles like what Geoff just put out.